Welcome back, traders. Today we are back on the Forex market outlook, and just like we discussed in yesterday's analysis, this is the continuation where we are shifting from what the market has done into what we are expecting in the coming week. Now, based on the weekly structure we broke down, the dollar is currently showing strong bullish characteristics with a clear series of higher highs and higher lows. That simply tells us buyers are still in control on the dollar index side. On the other hand, gold has been moving in a bearish structure, forming lower highs and lower lows, and we also highlighted a strong resistance area around the 4,572 region, where price has been reacting and rejecting to the downside. For EURUSD, we initially had a bearish expectation, but what changed the picture is that key resistance around 1.16 has now been broken and flipped into support. This is a very important structural shift because it means the market is no longer purely bearish there, and we now need to watch how price respects that new support zone going into next week. And for USDJPY, the dollar strength is still supporting bullish momentum, and overall we continue to see buy side pressure as long as that structure holds. So in simple terms, technically speaking, the dollar is still strong, gold is still under pressure, USDJPY is bullish, and EURUSD is transitioning into a more uncertain or reactive zone after that breakout. Now going into next week, the first thing we need to do is align this technical picture with fundamentals, because that is what will determine whether this structure continues or gets invalidated. So let's break down the expected news for the coming week and what it could mean for the market. Starting with Monday, we have a high impact news event, which is the ISM Manufacturing PMI coming in around 3 p.m. This type of data is very important because it gives us an insight into the health of the US manufacturing sector. If the data comes out stronger than expected, it is generally bullish for the US dollar because it signals economic strength. But if it comes out weaker than expected, it can create short-term weakness on the dollar and push gold and EURUSD higher temporarily. Moving into Tuesday, we don't have any major high impact USD news, so the market may likely move more technically, reacting to structure and liquidity without strong fundamental interruption. On Wednesday, we have the ADP Non-Farm Employment Change coming in at 1:15 p.m. This is an important early employment indicator because it gives a preview of the NFP report. If the ADP numbers are strong, it usually supports dollar strength and puts pressure on gold and other major pairs. If it comes weak, then we may start seeing early signs of dollar weakness ahead of Friday's main data. On Thursday, again, there is no major high impact USD news, which means the market could potentially slow down or start positioning itself for Friday's volatility. Now, Friday is where things get very important for the entire market direction. We have multiple high impact USD events coming in at 1:30 p.m., including average hourly earnings, non-farm employment change, and the unemployment rate. These three together are one of the most powerful market drivers for the US dollar. If the results come out stronger than expected, meaning job growth is strong, wages are rising, and unemployment is stable or improving, then that is generally bullish for the US dollar. In that case, we would expect gold to come under pressure, EURUSD and GBPUSD to move lower, and USDJPY to push higher as dollar strength dominates the market. But if the results come out weaker than expected, meaning lower job creation, weaker wages, or rising unemployment, then the dollar will likely weaken significantly. In that scenario, gold would likely push higher. EURUSD and GBPUSD would gain bullish momentum, and USDJPY would move to the downside as dollar strength fades. So overall, this week is very much a dollar-driven week, and every single pair we are watching will react directly to how the dollar behaves around these key news events. Now, in conclusion, the most important thing for traders is not to predict the market, but to wait and react. Let the dollar show its real direction first, and then align with it. If the dollar remains strong, we continue focusing on sell opportunities on gold and buy opportunities on USDJPY. If the dollar weakens, then we switch the bias accordingly. And that is what we will be watching very closely as the week unfolds. That is all for today's video, and I'll see you in the next update.